Good afternoon, good morning, good evening, everyone. It is 3:15 p.m. Eastern Standard Time on this 21st day of June 2021. Happy Monday. Taking a look at Cardano here. It's looking pretty ugly on the, depending on what side of the market you're on. If you're a bull, it looks ugly. If you're a bear, it looks really nice because we have all the conditions required for looking at a really nice continuation move south. Everything on the chart currently fulfills a K-cross strategy and an ideal Ichimoku breakout strategy, which is span A is below B, which it is. So we see single span A is the green average out in front here. Single span B is the red average. You can see that that is below. We have the Tenkan Sen below the Kijun Sen, so the blue line is below the red line. And we have price below the cloud, which it is. Price isn't far away from the conversion line or the baseline, the Tenkan Sen and the Kijun Sen. And then we have the lagging span or the Chico span below the candlesticks and an open space, meaning that if we were to take the current close and move forward 5 or 10 candles, is it going to run into that price sideways? No, it's not. So this is all of the kind of things that we would like to see for a sustained move lower. Volume has increased. If you look at the daily volume today, it is the highest of the past 3, 6, 7, 8, 9 days. Highest volume of the last 9 days, and honestly, I think it might reach a possibly like a 2-week high. Oh, sorry, like a 12 to 13 day high. It could reach if we see volume continue to come in on Cardano here. So if we look at the volume profile. Oh, not the session volume. I don't want the session volume. Go over here. There we go. If we look at the view, not the view app either. I know what I'm doing. Okay, here we go. So if we look at, I had these drawn earlier. This blue arrow here is pointing to a confluent zone of 3 primary areas. It's the 382 Fibonacci retracement along with the 618 Fibonacci extension. And that all lines up on that $1.20 level. That shouldn't be a surprise. I've talked about this a lot over the last month or couple months or so, that the $1.20 level is the one to pay attention to in the near term. But below that, if I zoom in here, below that, though, there's something that happens. You can see that there's a pretty open space between $1.20 and then that 84 to 94 cent range. We've talked about 84 to 94 cents as the next level below 120. And 84 to 94 cents is also a level I feel like is going to remain as an important primary support level. I don't think 120 is it. I think the 84 to 94 cent level is one where we will still see most of the buyers come back in. I know it's not represented in the volume profile, but it doesn't look like it is. But again, given the amount of time, the amount of days that were traded in this time frame versus what was down here or up here, there's a reason why I feel like 84 to 94 is going to be a pretty hard area to cross below or to actually close below. We've got the 50% fib retracement there. The 786 extension is there too. But then if that doesn't hold, again, the 618 at 71 cents, but ultimately you're looking at that mid 30 cent range as I think the all-time, not all-time, but this current bull market move that might be the low. We'll see. 84 to 94 cents definitely in the cards. I think $1.20 is fairly a certainty. In fact, we did trade within that range. If you look at the daily candlestick, the low is at 122.67. So we have tagged that area, and we're still putting pressure on it currently on the daily. The oscillators are pointing to continued pressure south here. Nothing is saying that there's a lot of change in direction going on. So this is definitely one of those examples of short rallies, short any pumps, short any spikes, and yeah, so we'll continue to see how this plays out. From all of us here at Exchange Rates UK TV, thank you for watching. Please don't forget to like and subscribe.